Hey, everybody. Thanks for coming to watch the webinar. We got a great one for you today. We're going to be talking about overtime. And I know there was a lot of fun new developments for 2025 on no tax on overtime. So we're going to get into that. And hopefully you guys will get some great information out of this. I'm Tom. I'm the tax team lead here at Volpe.
And I am Evan. I am a payroll specialist here.
All right. So let's get into it. So, no tax on overtime. That's new policy for 2025. What that means specifically is that the 50% premium that employees get on overtime pay that's mandated by the federal government is not going to be subject to income tax for most folks. They're able to get a deduction for it on their personal return. So the first thing to dive into there is that federally mandated bit, because there's a lot of different ideas and a lot of different rules on what actually constitutes overtime, depending on where you are. But for this specific tax policy, it's all about the overtime that's required by the federal government, which is any hours over 40 within a 7-day work week that the employee works. Now, the first question there probably is, which 7 days? So if you don't already have a policy in place of what constitutes a work week, that is something that's really important you need to have, especially for this new policy. So you're pretty much can be whatever 7 days you want, as long as you're consistent. You don't really change it unless there's a good reason to. You can actually have different work weeks for different sets of employees, if there's a good reason for doing that. Again, as long as it's consistent, that's the key there. You can't just change it just because someone hit overtime one week and you want to shift that work week so they don't hit overtime. There's kind of this weird myth that you can actually average overtime out over 2 weeks. So, as long as you hit 80 over 2 weeks, you don't have to pay out overtime. That's not true. I don't really know where that comes from, but that is certainly not the case. And there are exempt employees. So even if someone is working for you, if they're salaried and they're making enough money and they're in a role that the government says it's okay for them to be an exempt employee, then they would not be subject to any overtime anyway. So perfect example, if you had a in-house accountant, they'd probably be salaried and you would not have to pay any overtime to them because they are an exempt employee. Same would apply to most managers, admin staff, outside sales staff. In most instances, that'll be the case as well. This does only affect the personal return of the employee. So it doesn't affect payroll taxes at all. You can still take out FICA just like normal. And doesn't affect their withholding on their W-2 either. So they'd still be having taken out maybe a little bit more than they actually needed to. Might end up with a bigger refund when they file their 1040. Evan, do you want to talk about those reporting requirements for employees?
Yeah.
Employers, I should say.
So the employers are going to report that FSLA overtime premium in the box 14 of employees W-2. For 2025, employers are going to be able to report this info on a separate statement. However, in future years, that is going to change. And I will talk about that a little bit at the end of our presentation. But if that reporting is missing, the employee might have to dig back through their pay stubs. So if you can locate that, it might save them some time, but otherwise they will have to pull that info just from their pay data.
But the good news is for 2025, since it's a new policy, there is no real reporting requirement for employers.
Absolutely.
There will be for 26 though. We will get into that. So on the employee side, what this will look like, they're able to take that deduction on the Schedule 1A new form for this year. It's got some of the new tax policies on there. This one, along with no tax on tips, extra deduction for seniors, and a deduction for interest paid on a new automobile manufactured here in the USA. It is an above the line deduction. What that means is you don't have to itemize. Most people don't itemize anymore. The standard deduction is so high that it really doesn't make sense for most folks. So even if you don't itemize, you are able to take advantage of this deduction. Everybody gets up to $12,500 a year. If you're married, then each of you can get it on there. And that is the cap for everybody. There is a phase out. So if you're making quite a bit of money, that cap is going to start to slowly go down once you do hit those phase outs, and that's 150 for individuals, and it's 300 if you are filing joint.
I can take these examples.
Yeah, of course.
So these are just sort of a rundown of how overtime kind of works. They're going to want to start distinguishing between qualified overtime and regular overtime hours worked, which is a little complicated, but we've got some examples here to kind of break down the situations in which these would differ. So example one here, let's say we have an employee who's working 45 hours in a work week. They've got that normal rate of 20 per hour. The extra 50%, the premium rate of that overtime is going to be the deductible overtime. So it won't be the whole 1.5 extra. It's just that 0.5 deductible overtime. When it comes to example two, we have an employee who is working 50 hours in the first week and 30 hours in the second week. That is that average that we were talking about earlier in the presentation. They cannot be averaged over multiple weeks. So that employee actually had 10 hours of overtime in the first week and then 30 hours regular in that second week. So that 10 hours will have to be reported. In number three, we have the example of all our folks who are in California. California starts charging overtime, or they started paying out overtime, I should say, after 8 hours in a day. So if you have an employee who worked 3 days, they were each 10 hours, any hour over that 8-hour period, that is going to be overtime. So in this example, we have a California employee who's working 8 hours a day or 40 in a week. They got double pay for 12 hours in a day or 8 hours on the 7th consecutive day of work. So they worked Monday 9 hours, Tuesday 10 hours, Wednesday 10 hours, Thursday 13 hours, $20 per hour. So that overtime premium with California is going to be based on each of those days that were over 10 hours. So you've got 1 extra overtime hour on Monday, you've got 2 on Tuesday, 2 on Wednesday, 5 on Thursday, and that's all getting paid out at that premium rate. However, when it comes to the overtime on the federal side of things, they're only going to be counting 2 hours of that as overtime, as 2 hours are over 40 hours a week. So that would be if you were logging qualified overtime versus regular overtime, you're going to be qualifying those 2 hours because those are the only two that went over 40 in a week. In example number 4, the union rules require overtime pay after 35 hours in a work week. And let's say that the union employee works 42 hours in a work week. The union is seeing anything above 35 hours as overtime. That's what you would log as your overtime. However, the qualified overtime is, again, only the 2 hours over 40 in a week.
And just to clarify, that's not all unions. It depends on your union contract. I don't think a ton of our clients have union employees, but at least a few of them do.
They do.
And I think they do have special overtime rules in their contract.
They do.
So it's good to point that out.
This last slide is just sort of an overview of how it might look in your payroll system. This is ours, payroll relief. And starting 1/1, we have this new column show up that is your qualified overtime column. So this is the separation that's going to help prevent payroll tax reporting issues, and it's going to basically get everything reported on your W-2 automatically correctly if we're logging these hours in the system. If you're entering your own hours in a payroll system, regardless if it's ours or other systems do have similar setups to this now, just make sure you're adding that correct amount of qualified overtime like we kind of discussed in those examples. At 2025, they're not super concerned about all the reporting because it's a new rule. They're not going to be too strict on it. But going forward, they are going to want us to log these hours. So try to make sure you're sitting down and going, okay, well, I'm in California. All these folks really just work daily overtime. None of it should be qualified. Just make sure you're sitting down, reviewing your folks' time, and that those columns are filled out correctly. If you have any questions, I am always happy to kind of clarify this. It's new policy. It can be totally confusing. We had to do our own research to figure it out. So please reach out if there's any issues with that or deciphering what needs to go where.
All right. Well, that's all we've got for this week. We'll be doing another webinar each Friday at 2 p.m. Central Time. Come and join us live, and any questions you have, even if they're a little off topic, we'll be more than happy to help everybody out. So until next time, thank you so much.